Hello, hi, and welcome. Today is the second session of Chapter 2 in Corporate and Other Laws, and the first and the foremost important topic that we are going to discuss in the second session is about one person company. One person company is the unique feature that has been introduced in Companies Act 2013. Countries like India are in very much need of such a provision to bring the businesses in unorganized sector into the organized sector. So, a small introduction to this OPC is given here. That is, OPC means a one person company, and by and large, this OPC will have the nature of a private company. So, whatever the features that are available for a private company or by and large is also available under one person company. And it encourages the entrepreneurship and the corporatization of business. So, businesses which are going on without the corporatization model will also come into the fold of corporate environment. So the speciality of this one person company is procedural requirements are very simplified by giving certain exemptions as a special features. And apart from that, this one person company do enjoys the separate legal entity status like that of any body corporate, whether it be a public company or a private company or a government company, whatever the legal entity is available, the same is also being enjoyed by one person company. And apart from that, it do has the limited liability. The one person company do enjoys the privilege of the limited liability characteristic like that of any other corporate body. So, dear students, this is all about a brief introduction to a one person company. And now we are going to discuss about some special features and the special provisions that are available to a one person company. There are about 12 special provisions that are given in your curriculum which are unique to a one person company only. So the first special feature with regard to formation of a one person company is that in case of a one person company, the memorandum of OPC has to indicate the name of the nominee while filing its documents with the register of companies for incorporating one person company. Why to provide the name of a nominee only in case of one person company means in the event of the death of the subscriber or incapacity to contract, in all such cases, the nominee will become the member of the company automatically. You know that in case of a private company, there will be two or more members, and in case of a public company, there will be seven or more members. So, if something happens to one person, the other persons will be there and they will continue the business. But as such, in case of a one person company, the only one person will be there. If something happens to him, then there should be someone to step into his shoes and continue the business. So that is why the special provision is there in the memorandum while incorporating an OPC. The name of the other person who is called as a nominee must be mentioned in the memorandum. The second aspect or the second special provision is that whoever is being appointed as a nominee, he should give his prior written consent in the prescribed form, and thus that should be filed with the register of companies at the time of incorporation, along with its memorandum of association and articles of association. So the second special provision of one person company is that the prior written consent of the nominee should also be filed along with the memorandum and articles with the registrar in order to get OPC incorporated. And the third special feature is that the nominee do have a right to withdraw his consent at any time. So once if a nominee gives his consent to continue as a other person to a OPC, he can exercise the right to withdraw his consent to continue as a other person to an OPC during the course of business. So that is it's a third special provision. And next one is that the member of OPC may at any time change the name of the nominee or the other person. So, if the member who is running the OPC, if he wants to change the name of the nominee, he can do so by giving a notice to the company, and the company shall intimate the same to the registrar. So it is not the member of OPC who is giving a notice to the registrar to change the name of the nominee, but it is the company which is giving a notice to the registrar to change the name of the nominee. So this option is also available. A member can change the nominee, or a nominee also can withdraw to continue as a nominee during the course of business. So any such change of nominee to a one person company shall not deemed to be alteration of the memorandum. See here this point, the fourth special provision says that a nominee can withdraw to continue as a nominee of OPC, or the member or the person who promoted, who is the main member of OPC, also can change the name of the nominee. And in both the situations, there is a change in the memorandum. However, that shall not be deemed to be an alteration of the memorandum. So that is the fourth special provision in case of a one person company. So in normal understanding, what we understood is that whatever, if there is any change in the memorandum of association or clauses to it, we consider that as a alteration of the memorandum. When it comes to a one person company, the change of the nominee, either by the nominee himself or by the member of OPC, will not amount to change of alteration of the memorandum of association. Right. So the next important provision is that who can become a member of OPC or a nominee of OPC. So dear students, here there are three conditions which are laid under this act. Only a natural person can become a member or the nominee of a OPC, and he should be an Indian citizen. And the third condition is that he should be resident in India. So to become a member of OPC or a nominee of a OPC, there are three conditions. He should be a natural person and Indian citizen, and also resident in India. So whoever qualifies these three conditions can become either member of OPC or a nominee of OPC. And the next special provision is that a natural person shall not be a member of more than one OPC. See here. The beauty of this provision is this: a natural person cannot become a member of more than one OPC, which mean to say that any person can own only one person company, not more than one. So, and at the same time, a person also cannot be a nominee of not more than one OPC, and which mean to say that an individual can become a member of one OPC and at the same time can also become a nominee of another OPC. But no person can become a member of two OPCs, and no person can become a nominee of two OPCs. But one person can become a member, and the same person can also become a nominee for another OPC. So this is the beauty of this provision given for the OPC incorporation. Where a natural person, the next point says that where a natural person being a member in OPC becomes a member in another, so, by virtue of his being the nominee in that OPC, such person shall meet the eligibility criteria within a period of 182 days. So this is a situation. Say for example, if there is a person who is a member of a company OPC, and if he is also a nominee of another OPC, and by virtue of nominee in some other OPC, and if the member of some other OPC is died or becomes incompetent to contract, then automatically the nominee of that other OPC will become the member. So what happens? The same person is becoming the member of two OPCs. So in such a situation, there he will be missing the eligibility criteria. As such, the Act has provided a provision within a period of 182 days, he should meet the eligibility criteria. Eligibility criteria he should meet within 182 days. What is the eligibility criteria here, my dear students? Only one person can become a member of only one OPC, and if he want, he can become a nominee of another OPC, but the same person cannot be the member of two OPCs. That is the point you should remember. And if he happens to become by virtue of a nominee to another OPC, in such a situation, the Act has given him an opportunity to meet the eligibility criteria within a period of 182 days. Within a period of 182 days, he should prove his eligibility. Otherwise, the second member of OPC will become void. So that is the beauty of the supervision, my dear students. You should remember. Don't get confused here or there. Very simple special provisions. There are 12 provisions. So now the 11th provision is that about the minor. No minor shall become a member or nominee of OPC or can hold shares with beneficial interest also, my dear students, which mean to say that no minor, children like you who are less than 18 years cannot become a member of OPC, and not even become the nominee of OPC also, and you are not allowed to hold the shares with even beneficial interest also. That is the provision specially given for a one person company. And the last provision and the next provision is that Such a company cannot be incorporated or converted into a company under Section 8 of the Act. You know that the Section 8 company means it is a company with a charitable object. So, which mean to say that a one-person company cannot be incorporated for a charitable object under Section 8 of the Companies Act. And not only that, my dear students, it also cannot be converted into a Section 8 company. Though it may be converted into a private company or a public company in certain cases. You understand the point? It is a very, very beautiful point. You have to understand and appreciate it. So a Section 8 company to become a, see this one person company cannot be converted into a Section 8 company, and at the same time it also cannot be incorporated as a Section 8 company. However, a one person company can be converted into a private company, or it can be converted into a public company in certain cases. So that is the provision, special provision given under the OPC. And the 11th point here, 11th special provision here is that no OPC can carry out non-banking financial investment activities, which includes investment in securities of any body corporate. See here, dear students, OPC cannot be incorporated as a Section 8 company. That was what the previous point was saying. And at the same time, here in the special other point, it was saying OPC cannot carry out non-banking financial investment activities. You know, not to carry out the non-banking financial investment activities, it should not invest in securities of any body corporate. So that is the 11th special provision which was provided for a one person company. And the last and the very, very powerful special provision and the 12th provision is that OPC cannot convert voluntarily into any kind of company unless 2 years have expired from the date of its incorporation. See, the point says that if a one person company is incorporated, it cannot be converted into any other kind of company. Can it be a private company or a public company? It cannot be converted. But there is a time period for a period of 2 years from the date of its incorporation. However, my dear students, for conversion into voluntary conversion into any other kind of company within a period of 2 years, there is an exception. What is that exception? Where the paid up share capital is increased beyond 50 lakhs. In such a case, then a OPC can be converted into a private company. You understand the point? So, if the paid up share capital is increased beyond 50 lakh rupees, in such a case, within period of first 2 years from the date of incorporation of OPC, it can be converted into any kind of other company also. Or another exemption is also is that if the average annual turnover during the relevant period, which mean to say that during the previous financial year exceeds 2 crores rupees, then also then also a OPC can be converted into any kind of company within the 2 years of life from the date of its incorporation. This is the 12th special provision and very, very important and most powerful provision. So what it says in simply, a OPC cannot be converted voluntarily into any kind of company unless 2 years have expired. But for that, there is an exception, my dear. One exception is that beyond 50 lakhs rupees, if capital goes up, then it can be converted. And the other is that if annual average turnover in the relevant period exceeds 2 crores rupees, in that case also there is an exception to convert a OPC into other kind of company. This is the 12th special provision. Now, being it is a most important question, very, very important question. If you can able to write all these 12 points, not even a single mark will be reduced for you in your examination, my dear students. So when a question comes about the OPC and its special provisions, first thing what you have to do is that you need to write a little introduction. OPC means a one member company and it is having the nature of a private company, and it encourages entrepreneurship and corporatization of business, isn't it? And the procedural requirements are simplified through various exemptions, and it got a separate legal entity, and the limited liability provision is also extended to OPC like that of a private company and a public company. So this is the small introduction. After giving this small introduction, you need to write the 12 special provisions which are given. The first provision is with regard to the nominee. With regard to the nominee, the nominee name should be mentioned in the memorandum. Very simple. That is the first provision. And the second provision is that while filing that memorandum, the prior written consent of the nominee also should be filed with the registrar. That is the second special provision. The third special provision says that the nominee should be given and the right to withdraw his consent. Whenever he want to get out of that OPC business, he can get out of the OPC business by withdrawing his consent. And the fourth special provision is if the member of OPC is not interested to allow the nominee to continue as the other person, he also can change the name of the nominee. See what a flexibility is given, right? The OPC business is such a flexible and simple with lots of exemptions, with lots of privileges and with the minimal compliances. So that is the reason people are attracted to go for that business. And the next provision is that if a nominee change happens, that shall not be deemed as an alteration of the memorandum. And the next provision says that a natural person to become only a natural person, Indian citizen and a resident in India can become either as a member of OPC or as a nominee of OPC. Next provision says that a natural person shall not be a member of more than one OPC and one nominee of another OPC. So the limit is that you can become a member of OPC and a nominee of OPC, but you cannot become a member of two OPCs, and also you cannot become a nominee of two OPCs. That is this point, right? And then the next is that if you are a member of one company and also a nominee of another OPC, and if in the other and in the another OPC, if the member is died, you will become automatically a member of the other OPC also. which mean to say you are the member of two OPCs, but you have to meet the eligibility criteria within a period of 182 days. Remember, so that is the provision which is being given very nicely. And the next is that you people are minors. No, minors cannot become a member or nominee of the OPC. And you are also cannot hold shares with beneficial interest. Only a major can nominee of OPC or a member of OPC or can hold the shares with beneficial interest. The next 10th provision, special provision, is that a OPC cannot be converted into a Section 8 company, my dear. But a OPC can be converted into a public company or a private company, but cannot into a Section 8 company. And you are also cannot incorporate a OPC to carry out the business of a Section 8 company, which mean to say that for a charitable object, you cannot incorporate a Section 8 as OPC. For a charitable object, you cannot incorporate a one-person company. Right. So that is the 10th special provision. And the 11th special provision is that a OPC cannot carry out non-banking financial investment, and it should not invest in the securities of any body corporate. So that is the 11th and the beautiful point under OPC. The 12th point says, my dear students, OPC cannot convert voluntarily into any kind of company unless 2 years experience it got, which mean to say from the date of incorporation, it has to continue business for 2 years. Thereafter, it can convert voluntarily into a private company or a public company. But within 2 years, OPC cannot be get converted into a private company or public company, right? But there are exceptions, my dear, here. You have to remember. What are the exceptions? Exception with reference to paid up share capital is there. Exception with reference to average annual turnover is also there. If the paid up share capital during the 2 years if goes beyond 50 lakh rupees, or average annual turnover goes up more than 2 crores rupees, in both the situations a OPC can be converted into other kind of company. So these are the 12 simple special provisions for a OPC. Right? Good. My dear students, the next most important topic is Section 8 companies. After the one-person company, the most important in this chapter is the Section 8 companies. So the formation of companies with charitable objects will come under Section 8. So what are the charitable objects here? So charitable objects means you know that not for profit. So not for profit will be like these 8 are given in the act. So in order to promote a commerce, science, education, religion, or art, sport, charity, and protection of environment, etc. All these are considered to be charitable objects. So, and the other important thing here is that this Section 8 companies is used, whatever the profits it derives should be used for promotion of its objects only. If the reason behind promoting a Section 8 company is to promote the sports, they have to make use of the profits earned on that Section 8 company only to promote the sports. If it is a charity, it has to make use of the profits only for the charity, not for any other purpose. And here, in case of a Section 8 company, the other most important third aspect is that there is no dividend distribution. The profits earned should not be distributed among the members of that company. Whatever the profits that are earned, it should be used only to promote the object for which the Section 8 company has been promoted. So this simple diagram explains the basic understanding of a not-for-profit company, which is a Section 8 company. A company of this type can be promoted with an object of commerce, science, education, religion, art, sports, charity, protection of environment, etc., which is not having an object to make profits, to distribute dividend out of profits to its members. So no dividend, and the profit should be again used only to promote the object for which it is being promoted or incorporated. And dear students, after knowing the objects to incorporate a charitable company, here the second aspect that one should have to understand is that how the license will be given. So, for promoting a charitable company, that should be issued a license by the central government. And the most important feature of this type of companies is that without the addition of words limited or private limited. So you know that if it is a public company, we call it as a limited. If it is a private company, we call it as a private limited. But whereas for a section company, there is no addition of either limited or private limited. And this is the most important thing. And the license will be issued by the central government. So the registrar shall on application, they will issue a license to carry out the business. Upon satisfaction of the central government, the license will be issued. And whatever the privilege of a limited liability is there, that also will be extended to the Section 8 company, like that of a private company or a public company. And see, the privilege will be enjoyed. So the privilege of limited liability is there for a Section 8 company. If the company gets into bankruptcy, the liability of the members of that Section 8 company is limited to the extent of the nominal capital subscribed by them. Right? If something is unpaid on the shares held by them, only to the extent the members are liable to the company. And the fourth important point here is that a firm, a partnership firm may also can become a member of a Section 8 company. And the next important special provision with reference to a company with a charitable object is that there is no question of alteration of memorandum and its articles without previous approval of the central government, which mean to say that a charitable company can alter its memorandum and articles only with the previous approval of the central government. What we know, in case of a private company or a public company, they can alter the memorandum or articles on their own by passing a necessary resolution in the appropriate meeting and filing the same with the registrar of the companies, so they can alter. However, In case of a Section 8 company, it is not so. They should obtain the previous approval of the central government either to alter the memorandum of association or the articles of association. And not only that, a company registered under this section may convert itself into a company of any other kind only after complying with a certain special conditions. So, conversion of a Section 8 company into any other kind of company is not allowed automatically. A company registered under a Section 8, if it intends to convert itself into a company of any other kind, it has to pass a special resolution at the general meeting for approval of such conversion. What is to happen? A special resolution in the general meeting is required. So this is about the general provisions of a Section 8 company. So Section 8 company should get the approval of the central government to commence or to get incorporate it as a Section 8 company, and it can continue without adding the words of limited or private limited. However, it will have the limited liability only like that of any other private company or public company. A firm also can become a member of a Section 8 company, and it cannot alter its memorandum and articles without previous approval of the central government. That is the most important, because in the memorandum of association, we all know that there is an objects clause. The objects clause is the heart for incorporating a Section 8 company. If there is a right to convert the memorandum, alter the memorandum of association, this is Section 8 company, after taking the approval from the central government, it can alter the objects in the memorandum of association, and it can make the hidden profits by enjoying certain privileges, whatever that was given to a Section 8 company. So to arrest that fraudulent thinking in the minds of the promoters of the company, what the act included here is that with the previous approval of the central government only, the memorandum clauses or the articles can be altered by a Section 8 company. And the next important provision is that conversion into any other kind of company can be allowed only with a special resolution at the general meeting for approving such a conversion is allowed. So the next most very important thing with regard to a Section 8 company is that revocation of license. Once the license is given, the company under Section 8 can continue. If and in certain cases, central government do exercises the control on the business of the Section 8 company. So, if the company is not running as per the object for which it is been incorporated or for which the license has been given to that company, then in all such cases the government do has a right to revoke the license as and when the company contravenes any of the requirements or the conditions of this section, then the central government can conveniently revoke the license. If the central government comes to know that the company conducted fraudulently or violation of the objects of the company happens, or if the Section 8 company's business is prejudicial to the public interest, in all such cases, revocation of the license will happen, and immediately the company will be asked to suffix the name either limited or private limited with the order of the central government. That is one kind of revoking the license and converting that into a private limited company or a public limited company. When it will happen, dear students, as and when Section 8 company contravenes to the requirements or the conditions of the section subject to which a license is issued by the central government. And the second way how the revocation of license happens is that where license is revoked, the central government may also order for winding up of the company. So the Section 8 company can be asked to wind up its business under the Act, or the central government can also ask to amalgamate with another company which is registered under this section with the same objects. So the central government can revoke the license either by winding up the business of the Section 8 company or by amalgamating the Section 8 company with the another Section 8 company with the same object. And here, where the license is revoked, the central government is satisfied, and if the central government feels it is essential in the public interest, in such a case, it can amalgamate with another company registered under this section having the similar objects. So this is the, my dear students, you have to understand one is revoking of the license, and making it as a either public company or private company by suffixing the name of limited or private limited. That is the one way of revoking the license and allowing it to continue as a private or public company. And the second is that as and when it contravenes to the provisions, the license will be revoked and the central government can order for winding up of the business, or it can ask for amalgamating that company with some other one. And the another third aspect is that the central government can revoke its license and it can amalgamate that Section 8 company which is contravening the provisions under the Act, and it can amalgamate with the another company with the similar objects. Another Section 8 company with the similar objects, it can get amalgamated. And the fourth way is that if on the winding up or a dissolution of a company, if the central government orders for winding up or a dissolution of the Section 8 company, so in all such cases, the assets and liabilities will be transferred to the another company. And if there is any surplus out of it, the tribunal can transfer that money to the insolvency and bankruptcy fund. Insolvency and bankruptcy fund will be there, and to that fund account the surplus money of this winded up Section 8 company will be get transferred. This fund amount will be used for the Section 8 company's revival and or restructuring. So to make them viable, this fund amount will be utilized by the central government. The another option is that when a company registered under this section shall amalgamate with only with another company registered under this section having similar objects. So in order to amalgamate, it can amalgamate only with a company with the similar objects, or else it will be winded up, and whatever the surplus that comes, that will be transferred to insolvency and a bankruptcy fund. Right. So not only revoking the license, there is a penalty and punishment provisions also in case of a contravention. People may think that if we don't do the business as per the provisions of the Act after incorporating, what the government can do, it may only revoke the license given. Not like that, my dear friends. The government can punish the company and the officers and the directors of the company also. There is a different punishment for the company and for the directors and every officers. What is the punishment for the company and what is the punishment for the directors and every officer? See here, if the company makes any default, in such a case, for a company, it is punishable with fine only money, only fine will be given. So the fine will be from 10 lakhs rupees to 1 crore rupees on the company. And if the violation is there, the directors and every officer of the company will also be subject to punishment. For them, what is the punishment? For them, the punishment is imprisonment and also or the fine, and sometimes it can be both also. If the directors and every officer is very fortunate and lucky people, if they contravene to the provisions, they will get imprisonment and they will also be fined also. The imprisonment can be for a period of 3 years. It may extend to 3 years also, the term of imprisonment in case of violation of provisions. The act is very, very strong and stringent. If there is any violation happens under Section 8 companies. So the directors and every officers, they can be imprisoned up to a period of 3 years, or they can be fined. The fine may vary from 25,000 rupees to 25 lakhs, or they may be imprisoned up to 3 years, or they may be asked to pay fine even from 25,000 rupees to 25 lakh rupees as per the discretion of the company. So dear students, here you have to understand, in case of a contravention, there could be revoking of license and there will be a punishment also. So revoking of the license, as and when it is revoked, the Section 8 company can be converted into a public company or private company, or it will be winded up, and whatever the surplus is there, that surplus can be transferred to a company with a similar object, or the surplus can be transferred to a insolvency and bankruptcy fund. See my dear, that is within this winding up and surplus of transfer, it can be either a transfer to a similar company, or it can be a transfer to a insolvency and bankruptcy fund. So license, when it is revoked, the third choice is that the company can be amalgamated with the company with the similar objects. Only with the company with a similar object only will be amalgamated. All the assets of the revoked company and all the liabilities of the revoked company will be transferred to another company with the similar object under the Section 8. When it comes to punishment, the punishment to the company will be ranging from 10 lakh rupees to 1 crore rupees. The punishment to the officer and the directors of the company under Section 447 will be financially, the fine will be from 25,000 to 25 lakh rupees, and or here my dear students, it may be only fine, or it may be only imprisonment up to 3 years, or it will be fine between 25,000 to 25 lakhs, and imprisonment up to 3 years also is being prescribed, as it is a fraud under Section 447 of the Companies Act. These are the contravention provisions. So you may get a question exclusively under the contravention, or you may get a comprehensive question about the objects of a Section 8 company and its special provisions. Apart from that, in case of a contravention, what is the course that is being prescribed under the Companies Act? See, there is a small and beautiful flow chart here it is given. So contravention, what can happen? The license can be revoked and punishment can be awarded. If the license is revoked, what can happen? It can be converted into a public or private company, or it can be winded up and the surplus can be transferred to a similar company, or the surplus can be transferred to a insolvency and bankruptcy fund, or when license is revoked, the company can be amalgamated with another Section 8 company with the similar objective. My dear students, do remember, when the company is amalgamated, it can amalgamate with another Section 8 company which has been incorporated with the similar objective only. And the contravention punishment is also very nicely prescribed. If it is a company, from 10 lakh rupees to 1 crore rupees for punishment, and on officers, could it be employees or the directors, the fine is between 25,000 to 25 lakhs, and the imprisonment is up to 3 years, And if the officers are very fortunate and lucky people, they may get both the fine and imprisonment up to a period of 3 years also under the section 447 of the Companies Act 2013. So this is about the this is about the section 8 companies. So some exceptions are also given here. What are the exceptions that are given here is that only three exceptions are given. So uh, can call its general meeting by giving a clear 14 days instead of 21 days, and a requirement of a minimum number of directors and independent directors does not apply to this, and need not constitute all these committees by a section 8 companies. So there are three exceptions that are given to a section 8 company. That section 8 company is that with regard to the general meeting, it can give a notice with 14 days notice. 14 clear days notice can be given for convening a general meeting. In case of a public company or a private company, it is 21 days. So this is the one exception given. And the second exception that was given to a Section 8 company is that the requirement of minimum number of directors, independent directors, does not apply to this company like that of a public company or a private company. And the third exception given here is that it need not constitute various committees like a nomination committee, remuneration committee, and a shareholders relationship committee like that of any public limited company. So these are the only three exceptions. So this is all about the entire picture of a Section 8 company, my dear students. And again, I am giving you a recap of it. You should know the for what are its objectives, and for what objectives it can be promoted, and what it can do with the profits. It can do profit only to promote its objective, and it should not give the dividend. And there are certain special provisions under that, and privileges are also given. And the license matter is a very important. How the central government gives the license, and in what circumstances the license will be revoked, and if the license is revoked, what is the course of action is also very nicely given as a flow diagram for you to have a better understanding and a better memory in order to write in your examination without missing a single point to get full marks. And these small three exceptions are also given here. So with this, I will conclude my presentation about the Section 8 companies, and another most important beautiful topic that we discussed earlier, that is what is that? So very important, that is a one person company. So for this presentation, I would like to confine my entire session only for one person company and a Section 8 company. I thank you all, my dear students, and stay blessed, and keep study and make a notes while listening to the session. Thank you all.